Hi, welcome to the Weekend Investing Daily Byte. This is May 6th edition. We'll take a look at the market view, performance of the Weekend Investing products, highlight a stock from our portfolio, and take up some FAQs received from users. But the broader market was dull. It kept more or less in a range during the entire day, and all stocks, whether they were small caps or large caps, were reasonably range bound. The market seems to be waiting for more cues to go either way. There have been analyst reports about not much impact of the wave two, and yet the RBI governor recently painted a grim picture. So the market is kind of confused which direction to go. Although on the margin, it is a bit positive, I would think, and that is being reflected in the gradual sort of climb up despite the FI selling every day. In terms of the sectors, the metals again, took the forefront. Tata Steel in our portfolio, JSW Steel, they were running. IT stocks were doing very well. Mid cap IT was doing really well. Happiest Minds or Coforge, and even some large caps, Wipro, etc. Auto stocks also were buoyant today. But PSU banks, which were up yesterday, they took a bit of a breather. And pharma stocks also, which have been buoyant this entire week and month, that were a bit soft today. In terms of the weekend investing small case performances, again, the MI80H and all cap are reasonably strong candidates along with MI25. MINNF 10, which is the Nifty Next 10 small case, is also doing very well this week. We are up 3.2% on that and 7% in this fiscal. But the cake is taken by MI80H and MI25, which is right now up more than 23% for the year, and ATH is up 19%, closely followed by all cap at 14%. The long-term CAGRs pretty much reflect the same trends. If you see these three small cases which have long-term high CAGRs have performed that way, and as we come down, when we come to the larger cap part of the market, the returns are muted, and that's okay. I mean, we are having a different kind of a risk return in those strategies versus the more buoyant strategies which have more focus towards mid caps and some small caps also. Stock of the day for our portfolio, and this is not a recommendation, is Coforge. The idea of this segment is to showcase how having a stock in your portfolio and with it doing such kind of gyrations along the way, you can still hold on to it. So Coforge is currently in our MI50 portfolio, I believe, and it was also a participant in our ATH portfolio. But the ATH portfolio rejected the stock once we had this kind of drawdown here. So different momentum strategies will have different exit rules depending upon the design of it, and MI50 has more accommodative rules for exit in terms of it tries to hold the stock for a longer period, and it gives it more room to play within the the framework of the rules. So Coforge has been very good in MI50. It is almost doubled now from in a matter of about 7 or 8 months, and we continue to hold it. There is no rush to sell it, even though it is flying high today. The FAQ of the day is: what are the costs associated with investing in small cases? This is a frequently asked question. So, and a lot of people think that there are a lot of hidden charges, etc. But just to clarify everything, so the small case, when you open the account with them, they will charge you one time 100 rupees plus GST as a sort of a starting off fee, but this is only one time. Then the broker that you're choosing, and I would want you to choose a discount broker, because there's no point paying full service brokerage here. Would be the cost which the broker will charge you. So if it is broker discount broker like Zerodha or Upstocks, there is no brokerage fees. There is only statutory charges. So statutory charges means SEBI transaction cost, SEBI fee, SEBI cost, exchange transaction costs, STT, and any such other levies if there are any. So this is all regarding the cost. So one should try to keep that cost at a minimum. The rebalance cost, it is nil for most brokers, but I've heard that one or two brokers are charging for on every rebalance also. So please stay away from those brokerage houses and stay with with most of the commonly used brokers. Subscription fees is what you pay for the manager to manage this for you and provide you with rebalances every week. So the subscription fees, that amount, whether it is 7,000 rupees a year or 3,000 rupees a month or 10,000 rupees a year, you should look at it in terms of what is your allocation going to be. So if you're going to allocate 2 or 3 lakhs, then don't look for any strategy where you may end up paying more than, let's say, 2 to 3% per year as subscription fees. If you're allocating, let's say, 5 to 10 lakhs, then of course you can pay easily, 10 to 15,000 rupees as fees in case the average returns are likely to be on the higher side. So do this sort of trade off of how much are you paying for the subscription and how much are you expecting to get back. Then taxation, of course, it will depend upon your tax status. Some people will pay everything as business tax in case they are doing large transactions and a lot of volume. Some may pay only short-term capital gain, and some long-term capital gain may also come. But most of our strategies will have only short-term capital gain. So that's 15% for most people. Impact cost is another cost where the Friday close of the small case versus the execution that you do on Monday, there may be a small slippage there. It also depends upon how effectively you execute your strategy to be as close as possible to the model price. Sometimes it is possible, sometimes it is not. There may be some slippages that are out of your control as well. The overall yearly picture for you may be slightly short of the returns or maybe slightly more, depending upon how effectively you are managing the portfolio. In live portfolios, for example, we have absolutely no slippages because the user executes in live market along with the model. So this is sort of the difference between the live and the impact cost, and the small case. But largely, we have seen that people are able to come very close to the model returns also. So this is what I had for the weekend investing bite today. It got slightly long, but yeah, I mean, see you tomorrow then. Bye.